Hello and welcome here on the YouTube and Discord channel of Bookmap. My name is Oliver Sparring and I welcome you to our last Friday of the month live session in English language. I'm currently sitting here in the historic old town of Leipzig in Germany. We're actually currently visiting friends and family back in Germany, and of course we're escaping the heat back in Dubai. So I'm happy to be home. I'm happy to be here in this beautiful hotel, have a nice view on the Nikolai Church, and of course I'm happy to see all you guys here in our live webinar. So what are we going to do today? First of all, we're gonna start with a review of one of my current live trades that I did. I think it's a trade from last week that I'm going to show you from the ES future. Since I have my own company in Dubai where we teach people to use the markets for investing and of course for trading purposes, and we also have a great educational program for day trading. I used to screen record like every one of my trades, and I usually use these sessions to show you one of these trades, one of these recordings. We're gonna have a look at how I use the software Bookmap to find good trading opportunities, how I use the software to open and manage my trades, and of course I would like to share with you my thoughts on the markets and what I'm actually looking at in my day trading routine. When we finish the review of the trade, we're going to have a look at your questions. This is supposed to be an interactive webinar, so please feel free to use the chat function of YouTube or of Discord to send me all your questions about trading, about the software Bookmap, how to use the software Bookmap, or about trading in general. After that, we'll switch directly over to the Bookmap chart. We're gonna have a look at the market opening of the ES future. We're gonna have a look at where the market starts, how the market starts into the US regular trading hours session, and of course we're gonna have a look at possible trading opportunities that we're gonna face during the next hours. Before we start, let me just share my screen with you so we can quickly go over a short disclaimer. There we go. Everything that I'm gonna tell you today and that I'm going to talk about today is for educational purposes only. Trading futures is connected to a certain risk, and every one of you should be aware of these risks and therefore trades in his own best interest and not because Oliver Sparring told him to. Alright, so without further ado, let's just jump right into the session. Hi Alois, nice to have you here. And just as I said, if you have any questions about what I'm showing you, please feel free to use the chat. Oh, before we start, one thing, if you're currently watching the YouTube stream, I would like to give you the tip that in case you aren't a member of the Discord channel of Bookmap yet, you can use this QR code that hopefully my stream is showing right now. You can scan the QR code and you can directly become a member of the of the Bookmap Discord channel. It's completely free. It has great advantages for you, at least in my opinion. You're gonna be a member of a great community. You will have many resources, educational resources, and live streams just like this one from traders around the world, which is very interesting from my point of view. You have a great community that you can share your thoughts with that you can share your trades with, to hopefully get some ideas about how other people approach the markets and other people's trading systems. So I would strongly advise you to check it out. As I said, it's completely free. Just check this QR code and you're gonna be directly directed to the Discord channel of Bookmap. And of course also you can view my streams there. I've got my own text and voice channels, so even when you're not watching this webinar live now, you can use the Discord channel to share your questions with me. We're gonna have a look at all those questions either in the text channel directly or in one of our next webinar sessions. So also, in case you're not watching this webinar live now, you can use the comment function of YouTube, or you can also send me your questions via email at mail@sparring-academy.com. We're collecting all these questions and definitely we're gonna find the time to answer them in one of our next webinars. All right, so join the Discord. Let me just find the screen again. There it is. Alright, so as I said, this is no live situation, so please don't wonder if this chart is gonna have a slightly different look than the one you're seeing right now, in case you got Bookmap opened. This is a live trade from, don't let me lie, let me just check it out, from the 18th of July, so as I said, from last week, and it's a trade in the ES future. So first of all, let's gonna have a look at what the basic situation is that we're facing here. On the left, we are seeing a conventional 5-minute candlestick chart. You should know that. You also see a volume profile in the background, and you're seeing this red and this green line here on the chart. Those are actually anchored VWAPs from a bigger time frame. So in my market analysis, I always check out, based on different factors, where institutional interest in the market lies. I'm gonna say a bit more about that just in a moment. But of course, I also have in mind what the market is doing in the higher time frames, and I really like to work with these anchored VWAPs to get a bigger picture of who is actually in control of the markets. Are we in a sidewards range? Is the market ranging, or are we actually in a trend movement? And if so, who has the control? The buyers, the sellers? Is the trend healthy? Is the average buying position of an uptrend in the green or black numbers, however you want to call it, or in a downtrend? Is the average selling position in the black numbers? So these anchored VWAPs, depending on where I actually anchor them, they are telling me about who has control over the markets. And in this situation, you can see that the market is actually ranging between those two lines, which is a very interesting situation. And I kindly, I usually use these situations, to play the ranging movement. So what I want to do is I want to find long trades here on the green line, on the lower parts of the range, and I want to find short trades on the upper parts here on the red line in this case. I do actually prefer or let's say the safer trades, the safer entries we get when one of these lines get broken and the market starts to trend again. So those are the kind of situations that I would personally prefer to trade. But still, there are some situations where we can take advantage of those ranges too. We just need a certain plan. And hopefully this plan is not created while the market is finding itself in this range, but in the market analysis that every one of you should do before his or her trading session. So, as I said, market analysis and a trade plan are the basic fundament of everything that we're doing and everything that we're teaching. You can also see these colorful lines here in the 5-minute chart, which are also synchronized in my Bookmap chart. We're currently working on a software solution that we're gonna offer to everyone, not only our customers and the educational programs, but also to everyone who is interested in our kind of market analysis. As you can see, we're combining many different fundamental factors. We're using gamma levels, so dealer hedging in general. We are using gamma levels, we're using VANA, we are using charm, dealer requirements, and we are also using dark pool levels. We are using different kinds of VWAPs, liquidity of course, volume, market profile, Fibonacci retracements. So every thing that is of certain interest in institutional trading. We're combining these factors. So as you can see, let's just take this level here for example. You can see on this price here between the 56.51 and 56.52, we've got a level that combines the yesterday VWAP closing price. It's also a negative gamma level from the SPY, and it's also a positive gamma level from the SPX. So those are the kinds of locations that I'm basically looking for to usually find my trade entries. In this case, I did not use one of my levels from the morning analysis, but as I just explained, this is a simple ranging movement that I'm gonna be speculating on between this green line and this red line here on the 5-minute chart. So far for the basic situation that we're trading here. So as you can see in the 5-minute chart, the market just opened. This profile here shows the pre-session between, in case you're in Europe right now, between 12 a.m. and 3:30 p.m. If you're in the United States right now in Eastern Standard Time, this is the time here, 9:30, when the US session begins. And maybe you can see it here, this very small volume profile that just began to build itself here. This is the profile that actually refers to the US session. So market came down here to this VWAP level. Right before it tested this gray and red level down here, which is actually a dark pool level and negative gamma. You can see how well the market reacted to this level. Then it started to rise again, stabilized above this green line, tested the red line and rejected it, and now it just came back to this green line. This was actually before we had the correction movement in the higher time frame. So at this point of time we were still in a very healthy uptrend in the higher time frames. So what I was basically looking for were possibilities or chances to enter the market on the long side. So let's get over to Bookmap before I press the play button. Market came down here. We can see a lot of selling pressure. In case you're not used to my colors yet, the white volume dots, the white volume bubbles, those are the active buyers, so this is buying pressure, while the teal colored bubbles, those are the market sellers. This is the active selling pressure. To me personally, the volume bubbles are one of the greatest delta indicators ever invented. I really like to have a look at them. It's not that I actually would press the buy or sell button just based on what the volume dots are showing me. However, they're still a very great tool and a very great delta indicator that I always have a look at before opening my trades. So, as I just said, market is coming down here to this VWAP level. We can see that we had lots of liquidity lying here. Those are actually limit orders that were lying in the book for several hours, so it was to be expected that this is real liquidity that was actually meant to be filled. And as we can see, the market approaches down there, fills most of this limit order, rejects it for some ticks to the upward side, then still comes down, and just before the second limit order here at 56.43, we've got this little stop run here, and the market starts moving into the other direction. Also, in accordance with this rejection, we can see how the volume dots suddenly change from more the teal color to the white color, so we've got a shift and an unwind in delta, and we can see how active buyers are actually entering the markets. We can also see how new liquidity is added here above the price, and as soon as this happens, the market seems to be attracted by those prices since the market is moving in this direction. So as you can see here, on this point, I entered my first long position, and I actually expected to be successful with a very small stop here. So usually, in the most cases, I would probably place my stop order below the last low, e.g. for the below the last liquidity, which would be here, below the 56.43. However, in this case, you can see here's my entry, and I did not plan to actually look for a big movement here. All I wanted to trade is the range up to this red level here, to the upper VWAP level. So what I wanted to use is a very small stop and a very aggressive stop, so that's why I placed my stop order just below this little low here in the micro range. And as you can see, I immediately got stopped out. The market simply moved some 2 or 3 ticks into my direction before it actually turned the direction and stopped me out directly. You can also see if I would have placed my stop, as I usually do, right below this low here, the trade would have worked out from the beginning, but in this case I directly got stopped out. So the new trade that we'll have a look at just in a minute, we're actually starting with a book loss, or with a realized loss of minus $275. So just to keep that in mind. What you cannot see here on the Bookmap chart, you can see my levels from the morning analysis are actually synchronized, but what you cannot see is the green and the red line. So the anchored VWAPs, those are indicators that are not synchronized within Bookmap. So we just have to imagine them. As you can see, one of them is at 56.46. This should be here. So right at the level where the liquidity was. This is not random, by the way. There is a reason why this liquidity was exactly at this price. And our target is this red anchored VWAP, which should be around 56.55. So up here, somewhere around here. And you can very well see in the book that we've got a lot of black up here. So obviously there doesn't seem to be a lot of selling interest in this area, at least right now. Of course, this can change, but at the moment when we started the trade, there was a good chance to actually reach this area, since we also can see the anchored VWAP there. However, up to this moment, there doesn't seem to be a lot of selling interest above the 56.55. So this is the basic situation that we were facing. So let me just explain why I pressed the buy button right at this place. This is, if you're a customer of mine and currently watching the webinar, this is not the usual trade that I do. I am not really a breakout trader. I do teach and show my students how to anticipate breakouts, how to play this kind of trade. However, this is, for me personally, this is a very rare setup that I'm trading. However, in this situation, I kind of liked what I was seeing. There was this liquidity up here, which acts as a magnet for the market. We can see in the microstructure what we're calling upwards compression. So we can see how the market, how the price approached this level again and again here on the same prices. So we could actually draw a straight line up here, while on the other side we can see how the structure forms higher lows again and again. Okay, here's a small runner to the downside, but after this runner we can see again in the volume dots how there's actually market buying pressure building up, and as soon as the market started trading into this liquidity here in the ask or in the offer, however you want to call it, I wanted to be a buyer. And again, as you can see, I did not want the market to come down again and to continue forming this kind of range that we're seeing here in the market structure. What I was speculating on is a quick and aggressive break of this structure. So in this case, it absolutely made sense to me to place a very narrow stop just below my entry. You can see how the market started pushing here at the 56.46, and that is right where I placed my stop. So this is the general situation. Let me just click play now. In case this is the first time you're watching my webinars, I always speed up those recordings so we don't have to look at 30, 40 or even longer trades, 30, 40 minute trades, but we want to see everything quickly and at a glance. So let's see how this trade played out. As I said, what I want to see is momentum. I want to see quick follow through, and I want to see a quick break of the structure, and as you can see, this is exactly what happened. And always keep the chart here on the left. By the way, if you're wondering why the chart now looks slightly different, I switched from a 5-minute chart to a 30-second chart just to have a better look at the position and what the market is doing in the microstructure. So what you can see is we broke this level of the yesterday VWAP and the two gamma levels, and the market was trading into this VWAP here on the this seller VWAP here, where I wanted to target at least the first part of the trade, and this of course gave me a great opportunity to place my stop at the break-even price. So right now I don't want the market to fall below this level again. This is a support level now for our trade, so great chance. Also, we can use this limit order as a reference. Great chance to actually move the stop order to break even, and in case the market comes back to this red line, to the anchored VWAP, my plan was to actually get out of the first contract. So let's see what happens. market stabilizes above the level, which is great. Also, we can see in the volume dots, even though the market now comes back to the VWAP, we can see in the volume dots that we've still got strong buyers. And after we had this quick pullback here to the level with also another another stop run, we can see this buying sweep. New strong buyers are actually entering the market, and as soon as we slightly broke over this anchored VWAP level, I exited with the first of 2 contracts. The second one, since I saw such strong buyers entering at this level, I thought maybe we'll get another run for the second contract. So I still kept it, and I've set the new target here up at the dark pool level. However, even though the market now broke through this red line, we have to regard this as an area. So these anchored VWAPs from the higher time frames, they rarely act as how should I say it? They rarely act as support and resistant lines where the price actually, I mean, in this case it worked. In this case, you can see the market approached this level, and right exactly on the tick it rejected it. But that's actually what rarely happens. You have to imagine this is an indicator from a higher time frame. So don't see this as a line, but better, or rather regard this as an area where we expect sellers to become active. So even though now the market broke through this level, we can still expect stronger sellers entering the market. So right now everything's fine. We can see strong buyers, but we have to watch this scene very critically, and as soon as the market is not capable of forming higher highs, the plan was to also exit with a second limit order, with a second contract. So let's see how it played out. Again, strong move from the buyers. Now we can see the market just filled this bigger liquidity, this bigger limit order here in the offer. We can still see strong buyers. So everything fine up till now. Again, you can see I moved my stop order right below this low here in the microstructure. We're facing a small pullback here, nothing to worry about. And now that the market is approaching this high again, I want to see a quick break. In case I don't see that quick break, I assume that there's going to be sellers showing up in this area. And as you can see, it was not capable of forming a higher high. The market rejected the former high here, and we can see how again the volume dots change from white color to a teal colored delta here in the in this sideways range. And as soon as I just said, as soon as the market was not capable of forming a higher high, I also exited with the second contract. And as you can see, we've got a total win, including the former loss of $275. We've got a total win here of $500. All right. So far for the trade of the week. Let me just check if you've got any questions up to now. Nothing in Discord and nothing in YouTube. If you just entered the webinar, please feel free to use the chat function of YouTube or of Discord to ask your questions. And as long as you do not have any questions now, we're gonna have a look at the questions that we collected from the comments of the last session. Let me just open my camera here. Okay, so first question. Is there a way to get rid of the algorithmic border of limit orders following the ES future above and below the price? Okay. Yeah, right now I can imagine that this is a question that probably many of you have. So what I believe you mean is this kind of algorithmic behavior that we can currently see in the ES future. It usually starts at 2 p.m. Central European Time, which is 8 a.m. Eastern Standard Time. And there actually is a solution that Bookmap offers for that. However, it's a compromise. You will never completely get rid of these orders. But in case you're subscribed to market by order data and also to the MBO package, you should have a plugin that is called TraderMap Pro. Activate this plugin, and then you should see this button that says create. Click on that button. Now just give it a name. We're gonna call him Oliver, just because that's how he's called. Use the market, and as soon as you click the play button now, what Bookmap should do is it creates a new symbol. Before that we have to click the add button, I think. Sorry, I haven't done this in quite a while. Yes, should be right. Yeah, right. Click the add button, then we've got filters here, and what you want to choose is order change filter, and you want to go to not changed. So what this new chart is gonna do, it's gonna filter all the orders that are changing a lot. So it keeps in the chart all the orders that you can see are lying in the book for a longer period of time, and it filters all the algorithmic activity, be it spoofing orders or be it this kind of algorithmic behavior that we can see right now. So the chart is now filtering all these liquidity that is added or pulled from the chart or from the book in a short period of time. So what it says now is show only the orders that were not changed. So now we click on the play button, and as you can see, it's creating a new chart up here that is called Oliver. Okay, let's check out this chart. Hotel internet is not that quick, so let's just give it a minute. Oh yeah, Alois, good point. Bookmap now has a new plugin that is called TraderMap Lite, and I didn't even know that actually. I've just seen it when I opened up Bookmap. It's for free, and as far as I know, it's doing the same thing. So you don't even have to pay for it. It's filtering out those unwanted algorithmic orders. Let's just wait for the chart for a minute. Can already see the CVD line down there. There we go. So as I just said, it's a compromise. You'll never completely get rid of these kind of orders, but if you ask me, this is a much better readable chart than the usual ES chart. If we just compare the two, this should be the same extract from the chart as the other one. So here you can see how this algorithmic order keeps on following the chart. Okay, here we had a news event, that's why it went off for a while, but then as soon as liquidity came back into the book, also this annoying algorithmic order came back, and now with our new chart we can actually see that most of it actually gets filtered out, and what we can see now are the orders that we're actually interested in, that are of bigger size and that actually lie in the book for a longer period of time. So if you ask me, this is a really great function. It cleans up the chart. However, compromise, what you cannot do now is you cannot place any trades from the chart. At least I don't think so. I'm not even sure about that. Yeah, okay, you cannot activate chart trading from here, so you can't place any trades, since this is not the ES future, but yeah, a kind of artificial kind of chart. It's called Oliver, so it must be artificial. Okay, let's close it down. We don't want to waste internet downstream. So let's get back to the ES future. So if you ask me, this is a great way to clean up your chart a bit and to get rid of this annoying algorithmic activity. Alois, you're very well informed. Try light works better as this pro. Okay, so if we can trust Alois, and I'm sure we can trust him, he says the light version actually works better than the pro setting. I'm definitely going to try it out. Thank you, Alois. Bookmap is also working on trading in stops and iceberg. Yeah, great thing. All right, let me just get into another position here. Second question. When I connect my interactive broker's trader workstation, is there a possibility to trade the micro ES future from the ES heat map chart? Absolutely. So if you, sorry, Windows showing some old photographs. Absolutely. Bookmap has the cross-trading function. I think that's what they call it. If you use chart trading up here, you can use this little window here to activate chart trading. And then here in this window, you can activate cross-trading. So what this does is, let me just click on the MES future. If I would click start now, what cross trading does is it still shows me the true ES future. So this is not the micro ES, but the big ES, as you can see. However, it routes my trades to the MES future in whatever you're using as a data feed or broker. And so if I would activate this now and I would open or place a limit buy order down here, it would actually place a limit buy order in the micro ES future. And of course, as soon as you connect your Bookmap software to your TWS, to your trader workstation from interactive brokers, you can use this window to actually choose between trading the ES future in Rhythmic, to trade the ES future in your trader workstation, interactive brokers, or to trade the MES future in your interactive brokers account. So cross trading is a great tool in case your trading account is not that big. In my eyes, micro futures are a great invention that the CME gave us in the recent years. If I remember back 10 or 15 years, private retail traders did not have the chances to actually take use of the regulated futures markets. That's why so many private traders moved to the CFD markets back then. But as I said, now we've got the micro futures, so you still have the advantage to trade a regulated and standardized product, which is a great advantage. Everybody gets the same price, everybody sees the same order book, everybody receives the same traded volume. So if you want a tip from my side, use futures if you can. And in case, as I said, in case you got a rather small trading account, you now have the chance to use the micro futures. So take advantage of that. Let me just read out one more question. Okay, this is a personal one. Did you ever completely crash a trading account? Well, when I first started trading, I was still a student on the music university. So I think I started out with a 300 euro account, and I actually crashed this one on the same evening I opened it up. So yes, I did crash an account, but I don't believe that this is what you mean by crashing an account. Of course, I had some, in my learning phase, as most people, I got some big losers when I started out my swing trading career, because I didn't know what I was doing, as most of you surely had this experience before, but I never completely crashed my bigger accounts. So I know there's a lot of people out there who claim that in order to become a professional trader, you have to have crashed at least one trading account. I do not believe that this is completely true. However, on the other side, it surely gives you some experience and perspective. So if you ever lost a great sum of money on the markets, it either makes you walk away from trading forever, or it makes you a lot more careful in what you're doing, which is a great learning factor after all. So yeah, I never completely crashed a big trading account, but I had some big losers back then, definitely. All right, there's one more question, but I think this would be a bit much for today. We're gonna use this question for the next session. So in case you're oh, Alois, oh, you're Bookmap Discord moderator. I didn't even know that. One of them. Okay. Let me just share my screen with you. Let's have a look at the markets. Before we take a look at Bookmap, you can see the market opened 10 minutes ago right here. We're gonna have a look at that in just a minute. Before we do so, let's start with a quick look of the chart and of course of the economic calendar. We just talked about it. We had some news event, core PCE price index data at 8:30 a.m. Eastern Standard Time. So I strongly advise you, in case you ever have a news event, I'm using the calendar of investing.com. If you ever face a news event that has 3 stars here and is related to the US dollar, just simply don't trade. Close down all your open trades at least 5 minutes before the news event. Wait for a while. You can see it very well here. Let's just scroll back a bit to 8:30. Okay, where is it? There. In case you ever miss a news event, Bookmap is a great tool that actually warns you before it happens. You can see 2:30 is right here. So let me just zoom in there a bit. 2:30 is right here. This is, by the way, this is Central European time. So this is 8:30 Eastern Standard. So before the news event actually happens, you can see how the market makers pull the liquidity from the book. The Bookmap heat map suddenly gets kind of black. Of course, there's some bigger orders from certain institutional traders that remain in the book, but the market maker liquidity is pulled away. So this is what basically makes the price vulnerable and very volatile in these kind of news events. And you can see right after the event happens and the market flushed around here for a while, the liquidity is added back into the book, and that's right when the market stabilizes. And you should wait for the market. You should definitely always wait for the market to stabilize again. This was a small news event. You know, sometimes those volatile movements are much bigger than what we are facing here, and they actually take much longer before the market calms down a bit. And what you always should do is just wait until the market stabilizes and gets back to a more rational and predictable behavior. So let's get back to the economic calendar. So I do not see any more news events with 3 stars, at least for today. So we're free to go. And which is great, because as some of you might know, I also stream each Tuesday of the week in German language, and usually when we stream on Tuesday at the same time, we're facing a news event around what is it, 10 a.m. Eastern Standard Time. So Tuesday 10 a.m. is one of the most common news event times, and we usually have to wait until after my webinar until we actually can think about trading anything. So this is nice. Okay, let's check out the day. As I said, I always start my trading session with an extensive market analysis. And as I said earlier, I'm including into this analysis, I'm including several different factors like dealer hedging requirements, like dark pool levels, like liquidity, like span intervals, like several different other factors. So of course this would be far too much for this kind of public webinar here, but what I'm going to show you is some very basic level that each and every one of you should draw into their charts on a daily basis. That is the pre-session daily high. So this is the current day. As you can see here, we can see the pre-session from 12 a.m. until 3 p.m. of Central European time. And right here you can see the last day. Also here we've got the pre-session, and here on the right, this volume profile, this is the cash session. This is the regular trading hours of the US session. We use the yesterday's daily low. Usually, in case the range of the cash session is smaller than the range of the pre-session, I also like to draw in the high and low of the cash session. And what I can recommend to you is always have a look at the closing price of the yesterday's daily VWAP. For that, I'm using the VWAP of the complete electronic session. So not only the cash session, but the VWAP of the complete electronic session. So this is what I use the purple color for. And as you can see here, the market started in a upwards movement today. It broke above this VWAP level, and right now, quickly after the cash session began, we tested this VWAP level. The market rejected it, and at least up to now, stabilizes above the yesterday's fair value price. That is what the VWAP is. So as soon as we're above there, we've got a slight advantage on the upside. However, you can see this red line here, and as you learned earlier before, those red and green lines play a very vital role, at least in my trading approach. This is an anchored VWAP from the higher time frame, which is actually anchored up here at the high of the current movement, and this shows the average price that sellers gained for selling the market in this downtrend. So as long as the market is below this red line, everyone, or not of course not everyone, but the average seller actually is in a winning position. So as you can imagine, many institutional algorithms are programmed to wait for the price to approach these kind of VWAP lines, to use them to actually, in this case, sell further into the downtrend. So just some basic theory here. Even though the market is stabilizing above yesterday's fair value, I would not suggest, or I would not look for any long trades as long as we're below this red line. I want to see the market break through there. I want to see buyers take control, and on the other hand, if the market breaks or is capable of breaking over there, the market stabilizes over there, and we're seeing some strong buying, we can use this line also as a support line, because when the market comes back to this, many of the sellers that are still sitting in their short position use this kind of level to realize their profits or just close down their trades, their open trades, by buying. So this is a very, very vital level that we are seeing here. Also, it's a round number. It's the 5,500, so those kind of round numbers are of great institutional trade interest anyway. So for me, I still see the market kind of bearish. Also, we can see in my analysis from this morning that the Vanna and Charm exposure is bigger on the bearish side too. So we got a lot of selling pressure from option dealers, option market makers that have to sell the market in either direction. So they have to sell if the market rises, they have to sell if the market falls. So they actually take out some energy of possible upwards movements, and they're gonna sell into the downwards movement, which could actually accelerate this kind of movement. So just keep that in mind. Okay, let's jump right over to Bookmap. You can see the screen? Yeah, you can see the screen. Perfect. Alright, so here you can also see this purple level that we just have drawn into the chart. And above this purple level, you can see this span interval, this blue level. Let's talk about this in another session, because that's a too big topic for the last 5 minutes of the webinar. We want to see, we always have two of those. Let me just zoom out a bit so we can hopefully see a bit more of the chart. Oh, it's actually the upper span interval. So we usually want to trade as long as the market is between those two blue lines, because this is when the market is more predictable. This is more when the market is more stable, more rational. This is when our kind of levels that have drawn into the chart simply work better. As soon as the market leaves this range between the two span intervals, we expect more random, more volatile, and more unpredictable movements. So I personally prefer trading when the market is within the span interval, and as you can see right now, currently it's kind of fighting this level. We're ranging here. So basically what we're seeing is the market currently is above today's VWAP and also above yesterday's VWAP closing price. So as long as this is the case, we certainly have more of an advantage to the upside. We can also see in the book that there's a lot of shallow black down here in the bid, and there are more and bigger limit orders above here in the ask. So this is also a kind of indication that the market would certainly prefer movements to the upside. As you surely know, orders that find themselves in the book for a longer period of time, they like to act as magnets for the markets. Another thing that I can see here is this purple line. This is a line that I have or that I can see by subscribing to MBO data, and I personally like to use the Trade Finder plugin for Bookmap to make these kind of levels visible. We call this a DID, a dynamic iceberg development. So as soon as the market approaches this level, by using the MBO data, we can connect the order that was filled there on the level to a certain order ID. If now later the market approaches this level again and the MBO data or our software is able to realize that the order that is filled there has the same ID as before, we can actually assume that this, or not we can assume, we can be sure that this is an iceberg order that was actually placed there by a bigger institutional player, by a bigger institutional trading organization directly to the CME exchange. As long as this iceberg order remains at the same price and is not moved, we can always assume that the market sooner or later comes back there to these levels to actually fill this order. So this is a very, very strong indication that the market, we don't know when this happens, but that the market actually sooner or later comes back here to the 54.87 to fill this order. We can also see here right on the line how long this order already is in the market. So in this case it's 1 hour and 17 minutes. So this is also an order that lies right there for a longer period of time already. It was placed right here where you can see this little dot. And we can also see that right now 209 contracts of this selling iceberg order were already filled by the market, and the market does so in how do you say, it fills one by one contract. So sometimes you can see that an iceberg order is programmed to fill 5 or even 10 contracts at once. In this case, each of these 209 contracts were filled separately, but as I said, with the same order ID, so we can actually connect them to each other. We can actually say there is an iceberg order. And these kind of iceberg dynamic developments, as I said, as long as they don't move, as long as they don't move with the market direction, they always act as a really, really strong magnet to the market, and we can always assume, and this is what we're actually seeing right now, that the market sooner or later comes back to these levels. So, as I said, right now I see a slight advantage to the upside. So I would definitely be looking for long trades, at least at this time of the day. However, right now I wouldn't trade because I can still expect there's strong selling or strong sellers coming in as soon as the market reaches this this resistance level here at the 5,500. Let's just check if we've got anything in Bookmap up there. So yeah, at least right now I do not have a level from my market analysis there, but we can see there's a cloud of liquidity lying there. So if the market manages to move up there, we can expect lots of resistance. So what I personally would do and would personally recommend is wait for the market to actually get up there, fill this liquidity, and yeah, as soon as we see strong buying and we see buyers being able to move the market above these levels and stabilizing above these levels, that's when I would consider searching for long entries. As long as this doesn't happen, I simply wait. If the market, on the other hand, which I think is the less probable solution, if the market, however, is capable of falling below this yesterday's VWAP level, that's when I would start looking for short entries. All right, everybody, that's it for today. Thank you for listening. Thank you for attending. Right now, let me just show you our Bookmap deals. In case you're no customer of Bookmap yet, you can go to sparring-academy.com/bookmap, and there you will find some special offers for the software. In case you want to try it out, you will find the Global Plus quarterly subscription for $145 for the first 3 months instead of $292. If you're looking for the annual subscription, you'll find that for 579 euro, not dollars, sorry, euro instead of 933. Or if you're looking for a lifetime license instead, you'll find the global lifetime version for $974, which is actually the same price as the common price on the Bookmap website. But as far as I was told, you are also getting the advanced data package for free for 1 year. So check out sparring-academy.com/bookmap, and you'll find these offers. I think there's a place where it says special offers, I would say. I have to check out myself, sorry. And in case you're also active in swing trading, I would recommend to you our software TradeNeon. You'll find it at tradeneon.app. You'll find a lot of free educational material on how to use the software. We're actually working with COT data, seasonal patterns, term structure, open interest, many different indicators where we developed very certain, very specific algorithms to give you great opportunities, to find great opportunities in the commodity markets. So if you're also into swing trading, I would definitely recommend you check it out, tradeneon.app. All right, that's it for today. As I said, thanks for looking, thanks for attending, and we'll see each other on the last Friday of the month. Have a great day, good trades, and see you next time. Bye bye.